Thanks for visiting my channel. My name's Eric and I'm an amateur investor based in the UK.
Today, I want to run through a beginner's guide to self-invested personal pensions. This is a pot of money you can pay into with the aim of using it as a pension when you retire. What's the difference between a SIPP and just paying into a bank account? Or even paying into a works pension? Well, this is where the self-invested part comes in. With that pot of money, you can invest it and you have complete control over how them investments are placed. So you may decide to invest some of your pot in individual shares. So you may choose Unilever or Shell or Tesla, for example. Or you may decide to invest in a package of shares that have been put together. This spreads your risk out. So for example, you might buy into an ETF which has 4,000 different shares from all around the world. This means that if one company performs particularly badly, it won't affect your overall positions too much. So later in the video, I'll talk in a bit more detail about ETFs, which are exchange traded funds. So with a SIPP, you can decide how often you wish to pay money into the SIPP, and also how often you wish to buy and sell the shares that you've invested in. And the last point here is about tax efficiency. This is the main reason that I set up a SIPP about 9 months ago. Let's say this month I pay in £800 direct from my bank account. Then a few weeks later, the Inland Revenue will top up the amount by £200. Therefore, my £800 that I paid into my SIPP has now turned into £1,000. So why does the Inland Revenue do this? Well, if you, instead of paying that money into a SIPP, had paid that into a work pension, for example, then that money, that contribution would have been taken out of your salary before you paid tax. So this is the Inland Revenue's way of making sure it's fair between using a SIPP and using a works pension. 9 months ago, when I decided to set up my SIPP, I chose FREETRADE, and I'll show some extracts here from my FREETRADE account. So on the 19th of January 2024, I put £2,000 from my bank account into my FREETRADE SIPP account. So I was expecting that sometime in the near future, HMRC would top that up by 20%, so they would put an extra £500 into my SIPP account. And you can see this money actually arrived on the 21st of March. So what happens if you're a 40% tax rate payer? Well, in this case, you will need to claim the extra 20% back in January when you fill in your annual tax return. And similarly, if you are a 45% tax rate payer, that will also be claimed back in your January tax return. So another way that a SIPP is very tax efficient is in how profits are dealt with. Your aim when investing in a SIPP is to make profits over the year. Now, these profits are not subject to income tax or capital gains tax. So I mentioned that I chose FREETRADE as my platform of choice when I signed up for my SIPP 9 months ago. No regrets on my end. They've been really reactive and I really enjoy using the tool. If you're interested in knowing more about FREETRADE, I have put a link in the description to this video. So in the next part of this video, I wanted to talk about ETFs, exchange traded funds, and also go into a bit more detail into how I've invested the money in my SIPP. So I actually wanted to open up my FREETRADE account to you guys and let you know what investments I've made since I joined 9 months ago. So here we are in the FREETRADE app, and this is my account, and I'm live. So you will see that the 124,643.41 may go up and down slightly as we chat through. So I'll start off with an overview of the account. So if I hover over here, you can see that there on the 5th of September, I made my first deposit. And this was a pension. It was £39,840 that I deposited in from a prior pension. And then on the 13th of September, I transferred some more, another pension, which took the value up to 72,000. Then I transferred another pension there for which it's 103,000. And we have some smaller pensions which I transferred across. In total, I had 7 pensions which were with from prior employers, which I wanted to consolidate. So I moved all 7 across into this SIPP account here. So I've got a single place where I can view them. If I go to the 6-month view there, you'll see the final couple of pensions landing. But if I go to the 3 months, now these aren't pensions landing. This increase here is the value of my shares going up. So the investments have been improving their value, not just me putting more and more money in. So if I go back to the beginning here, you'll see that £124,600 is the value of what I have in there at the moment. But that's actually up by £6,274. I wonder if I can put my brush on. There we go. So that amount there, £6,274 is the value that my investments have increased by. So that's not me putting extra money in, that's the investments gain in value over the 9 months. Okay. So that's the 6-month view. If I go down to the 3-month view, you can see that over the last 3 months, the investments have gone up by £5,198. Over 1 month, they've increased by 692, and then I can go down to 7 days, they've gone up by £300, and today they've gone up by £57. So that's my overall portfolio. So it's a nice way of having a look at how your investments are done, and also seeing as you're putting money in there, either from transferring pensions in, or it might be that you've just got some extra cash that you want to put in there, maybe on a monthly basis, or if you get some cash that you feel like you want to invest, you can just transfer that across as well. And I'll show you shortly how you transfer the pensions in and how you can transfer cash in as well. But before we do that, I'll just run through what I actually have in the account. So the first one here, the overnight return, this one here is, that's what we call a Sonia tracker. So I've got most of my investments in there at the moment. This gives me, if I click on it, it'll tell me actually. So you'll see there, if I look at the Sonia tracker over the last 12 months, you can see it's a really straight line, which is unusual when you're looking at things like shares, isn't it really? They're usually up and down every day, whereas this is very much a straight line. And this is how banks lend each other money overnight. So it's pretty much set at 5.2% per year. So we've got a yearly view up here. So now 5.2% is not much more than you're going to get in the bank, but it's very low risk, as you can see by this line. It's not going up and down massively every day. So for me, who's going to be retiring in the next 3 or 4 years, having a lot of my cash in a fairly steady overnight return, such as the Sonia tracker, gives me a bit of confidence that if the market drops significantly, I've only got a couple of years for it to get back up again, that this at least will be giving me some value. Okay, so that's the Sonia tracker. It's where the majority of my money is held at the moment. So if I go back to my portfolio, the next one down here is called the Global High Yield. And these are actually bonds. So these are not shares. These are bonds that companies issue. And they're called high yield because they yield dividends. If I actually scroll down here, it gives me a bit more information. So I've got £8,000 invested in there. and they have gone up by 4.1% since I bought them. What else? Got some activity of when I bought and sold various bonds. But we can see here, this is quite interesting. 6.48% dividend yield. So that's how much I'll expect to get paid. Other than the share price going up and down, even if they stayed exactly the same, then on an annual basis, I should get 6.48% back in a dividend, which is paid to me or paid into this SIPP account. Okay. So that's the difference between a bond and a share. If I look at these, you can see that over the last 5 years, they haven't done too well. Over the last year, they haven't done too well. Over the last 6 months, they've done quite good. So they've gone up 5%. And if you take into account that they're also paying, over 6% in dividends, that's not too bad at all. I've had them for about 3 months. So I can see these again, 1 month, 7 days, or the daily view, which is quite interesting. Okay, so back to my portfolio. Next ones down are some shares that pay out dividends. So the bonds pay out a yield, which is a payment, whereas the dividends are payments by the company, which they pay to their investors. So if I look at the Euro Dividend Aristocrats, I can see, if I scroll down, see what these are paying out per annum. Dividend yield of 0.99, so not a massive dividend yield on this one. However, since I bought them, the value of the stocks have gone up by 12.34%, and I've only had them less than 6 months. So for me, that's been tremendous, actually. There they are, 6 months. They've gone up 13% in the last 6 months. Okay. So what else have I got in my portfolio? Next one are the FTSE All World. Now, All World trackers are quite interesting, and a lot of people use these in their investing. So if I look at them over the last 6 months, you'll see that they're not going up and down massively. They tend to if you look at them over the last 50 or 100 years, have around 9% per annum. So they have a much better yield than, say, the overnight SONIA rate, but they do fluctuate. And they can, some years they'll go down, some years they might go up 15, 20%. So they are more risky than bonds. But the good thing about the FTSE All World is they are diversified. And what I mean by that is they invest in different types of things. So they might invest in tech stocks and finance stocks and lots of other different types of industries. They're also diversified globally. So they have stocks from the Far East, they have stocks from the US, they have stocks from Europe, they have stocks from South America. So any trouble in a particular part of the world, there'll be some level of protection in here because they are globally diversified. So I hope that makes sense. Okay, so what else do I have in my portfolio? FTSE 250 is a stock I like. So the FTSE is the UK trading for companies who trade out of the UK generally, and the FTSE 250 looks at the mid-sized companies. So you'll have heard of the FTSE 100, the largest cap companies based in the UK. The FTSE 250 are the next 250 down from that, really. So they are the mid-sized companies. Now I've had these, let's see what my return's been on these. So I've got 3.62% return on these. And as you can see, I've been buying and selling them quite a bit. What else do I have in my portfolio? Oh, the last one there is commodities, a really small amount, £500 in there. Commodities are things like trading gold or iron ore or things that you can buy and sell on the marketplace. Okay, so that's where my 124,000 is invested. Let me take you through some other parts of the app. So we've got the insights section here, which is quite useful. So I can go in here and I can see of my 124,000, I've got 67% of it in bonds. I've got 21% in cash. Now that is extreme. I sold quite a lot of shares last week, and I'm going to reinvest them this week. Generally, my cash level would be less than 3%. So that was really unusual. Stocks down at 10% and commodities negligible, really. I can also look by sector on here. So 78% there in finance. That's because I've got them in bonds, really. And my positions here show them the overview of what I've just been through there with you, which is my stocks and shares. Okay. The discover section of the app lets you look at, helps you choose stocks, really, if you are interested in buying stocks, or if you want to buy an exchange traded fund, which is these groups of shares, such as the all world share that we just went through. And I can look in here, I can pick trendy ones such as the AI and robotics, IPOs, which are companies that are listed or newly listed on the stock market, tech companies, bonds, ETFs we just talked about, things like cannabis companies, cloud computing, crypto, the kind of trendy stocks. You can pick them out of the list. There are lots and lots to look at and choose from. The activity tab here, it shows what I've been doing in terms of buying and selling stocks. So I mentioned that I had a really high cash position at the moment, and that is because on last week there I sold £22,000 worth of my FTSE All World stock, ready to reinvest this week. Okay, so that's an unusual position for me. So there's my activity, and I can filter this. I could look at, for example, any dividends that I've received. And there you'll see these are dividends being paid out by these companies that I've bought shares in, or they could be a payment from the yields from the bonds there. So you can see this is cash that I've been paid from owning stocks. Okay. And lastly, but quite importantly, is your account part of the section. So you can see here that you have the option to transfer in a pension. And that process is quite smooth, really. You go in here and it'll ask you where your pension's held with Aviva or whoever. And the guys at FREETRADE will then go in and contact the company and arrange for it to be transferred across. Usually takes 2 or 3 months to do that. Or you have this contribute money. So if you have something you want to pay into your SIPP on a monthly basis, or you just have some extra cash that you want to pay across, then you can contribute that in. The contribute money element will give you that extra 20% from HMRC, whereas if you transfer a pension across, you're not going to get the extra 20% there. Okay, so overall, FREETRADE app, I've really enjoyed using it. I find it quite user-friendly, lots of information in there. So if you are interested in the FREETRADE app, don't forget to click the link in the description to this video. You'll see this free shares button here. So if you click the link in the video, you'll get this free share, which could be £10, it could be £100. Okay, so if there's anything else you wanted to know about a SIPP or FREETRADE, please put it in the comments, and if I can, I'll get straight back to you.
So if you've heard my outro, then thanks for listening. And if you haven't, then here's probably the most important bit of investing advice you'll hear on YouTube. Don't buy or sell shares in a company based on what someone on YouTube tells you. The big Wall Street analysts have large teams of professionals with access to vast amounts of data on every single listed firm. There are no YouTube gurus who know better than them. Use YouTube to find interesting bits of information on companies that you may otherwise miss. And when you find something interesting, do your own digging and see what the analysts in the big firms are saying. Never invest more than you can afford to lose, and don't expect to get rich quick. If you are interested in my background, I come from 16 years in risk management with PwC and Deloitte. I've never been on a trading floor in my life, but if I had, it wouldn't give me the edge on the big firms because they have big teams and masses of information. So don't look for a guru with an edge. Look for information on companies you're interested in. And if you're looking to invest a large amount of money, don't put it on individual stocks. Choose an index fund. The All World Index is a representation of all the stocks in the world. And if one company goes broke, then the index won't even move. Whereas if you've only invested in that one company, then you may have just lost your pension. Keep it fun, keep it affordable, and subscribe to keep getting my updates. Thanks.